Hi guys, welcome back to SS Forex Academy. So today we're going to be going over support and resistance, and what exactly are these concepts and how to obviously utilize them in your trading, particularly when it comes to indices and key levels and that sort of thing. So yeah, let's get into it. So what is support and resistance? Support and resistance is one of the most widely used concepts in trading and is utilized by most price action traders. These are known as levels in the market whereby price respects over time and can help one identify key reversal areas in the market. If price breaks a support or a resistance, the price often continues to the next level of support or resistance. Support and resistance levels are not always exact. They are typically a zone covering a small range of price so that levels can be breached or pierced without necessarily being broken. As a result, support and resistance levels help to identify possible points where price may change directions. So, for example, a resistance, you're always looking for a resistance on the top, and you will always look for a resistance on the bottom, as indicated in this example here. So, support. Support occurs when falling prices stop, change direction, and begin to rise. Support is often viewed as a floor which is supporting or holding price up. When a support is broken, it now becomes a resistance, and when a resistance is broken, it now turns into a support. So what is a resistance? A resistance is a price level where rising prices stop, change direction, and begin to fall. Remember, support was where falling prices stop, change direction, and begin to rise. So the resistance is the opposite of that. Price from the resistance falls. So resistance is often viewed as a ceiling, keeping prices from rising higher. When a resistance is broken, it now becomes a support, and when a support is broken, it now turns into a resistance. In an upward trending market, we look to identify the resistance. Likewise, in a downward trending market, you'd look to identify the support. So this gives us insight into making informed decisions about where to close the trades or where we can expect rejection or momentum to slow down or taper off. So the resistance is found at the peak of the current impulse. So as you can see here, this is your impulse, and at the peak, you will always find the resistance. So resistance will act as a ceiling to keep price to the downside, so to push price to the downside. So, okay, the resistance from the peak, so it can be identified as follows, right? Number one, we wait for a bullish candle to close, followed by a bearish candle close. So if you look at this example, we can see that this is your impulse. Here's your bullish candle that closed. We've got a bearish candle that follows and closes after this bullish candle, making this level the resistance level, right? So the candle thereafter must then open, form, and close below the level for it to be considered a true resistance level. So we identify that this level is the resistance. Is it a true resistance? We need the next candle that follows these two candles to open, form, and close below that resistance. Then we know that this is a valid resistance zone in the market. So the level drawn includes, number three, the level drawn includes both wicks of the bullish and bearish candle that forms the resistance. Okay, so you're basically, what that means is you will include for the the entire zone will include for the wicks of those candles as well, right? Okay, so on a support, in a downward trending market, we look to identify the support. This gives us insight into making informed decisions about where to close trades and where to expect rejection or momentum to slow down or taper off. So the support is found at the base of the current impulse. So if you look at this example here, this is the base, that's the impulse, and at the base of that impulse, we've got the support level that's formed. So again, number one, you wait for a bearish candle to close, followed by a bullish candle close. So you've got a bearish candle close at the base. You've got a bearish candle close at the base, followed by a bullish candle close at that base. Then you need the next candle thereafter must open. So this third candle here must open, form, and close above that level for it to be considered a true support. In this case, this candle has obviously opened, formed, and closed above the level, telling us that this level is indeed a valid support. So again, number three, we include for both wicks of both the bullish and bearish candle that forms as the resistance. So notice here, we've got the zone that is drawn as the support, and it includes for the wick of those candles. So that entire zone or area in the market is identified as a support level. Okay, so that basically sums up what support and resistance is. It's basically levels or areas in the market where price obviously reacts to and respects. So yeah, let's jump onto the chart quickly, and I'll show you guys some examples. So we're looking at it here on this chart. We can see that we've had an impulse. This is the US 30. So we've had an impulse here. We've had a bullish candle close followed by a bearish candle close thereafter. So immediately you know that you're looking at a resistance area in the market, and you would include for basically that candle there. So that now becomes the resistance zone in the market. So the resistance, how do you know it's resistance? You've got your first touch here, your second touch here, and obviously this was your third touch. So you can see prices respecting that area or level in the market, right? Now, if you were to draw the support, you would draw it from so a support is drawn after the bearish impulse. When you see at the base, you will start to see a bearish candle close followed by a bullish candle thereafter. So in this case, we use the wicks. That becomes the support in the market. So notice how price now ranges between. So once it hits the resistance, it drops to the support. From the support, it climbs to the resistance. From the resistance, climbs back down to the support, and then shoots back up to the resistance, drops off, breaks the resistance. This is what we know as a breakout, retest, and then a climb thereafter. So this is a breakout, typical example of what we call a breakout. So you broke through the resistance. You had multiple candle closes above this resistance area, and then price obviously came back, retested that level, and then pushed up to the upside. Okay. So major versus minor support and resistance. So minor resistance or support temporarily delays rising or falling prices within a larger market trend, while major resistance or support altogether stops either rising or falling prices and the larger market trend changes direction. Like in this example, right? So you've got your major resistance up there, and you've got minor levels in between. So between your resistance and your support down here, in between, you've got minor levels of support and resistance in the market, whereby price respects or reacts to, right? So that obviously delays the movement of price from for example, your support to your resistance. It delays the move. Instead of one big move to the resistance, you'll have multiple legs to this impulse. Okay, so minor price resistance / support is an artificial horizontal line representing an area which previously served as price support or resistance and has now transformed to the other. So if we go to the chart, right, you can see that we have identified, so we've identified the main levels of support and resistance, right? That being a resistance, let's just put this quickly here. So that's your resistance, and this one becomes a support down here. Okay, so that's support down here. Right, so now minor levels of support and resistance are levels that are in between these. So let's do this, and let's drop down to the 4. Okay. Now, these are your two major levels, the resistance on top, your support at the bottom. But along here, we've got other levels of resistance. So this becomes another level of resistance here. Just throw it in there. So there's your minor level of resistance. Got your bullish candle close followed by your bearish candle close after. So that is what we know as a key level or minor support and resistance. So that's a minor resistance because price left the support and has now reacted off this level in the market. So it's now dropped off from there, and that's the level there. And if you can extend this all the way through, you can see that price actually respected that right through. Okay, now here's another level down here. So this becomes your support area or support level. You see, and you've got other levels down here. So that there becomes okay. Let's try this out. Minor support, this becomes, so this was obviously here in this case minor support. Minor support, this becomes minor resistance. Now this becomes minor resistance here because price obviously acted as, so this level acted as support in the market at this point because we left the resistance, came down to the support, pushed up, broke this resistance, making this now a support, hit the main resistance, came down to minor support, came back down to minor support again, now pushed down to the minor support again, and this level now becomes resistance. So although this area here was support, remember when a support is broken, it now becomes a resistance. Like vice versa, when a resistance is broken, it now becomes a support. So these levels here, this would be minor support there, this would be minor resistance there. And I'm just going to put an arrow there as well. So minor resistance is there, as well as there, as well as here, that point. That becomes minor support. Minor support there as well. And that area. Okay, so basically that's how you identify minor support and resistance in the market. It's basically levels that are between the major resistance and support levels. So these are obviously turning points in the market as well. And it basically prolongs price's journey from the support to the resistance, or from the resistance to the support. Okay, and anywhere along these levels, we obviously look to find entries of, whether it's via smart money concept entries, whether it's candlestick confirmations, etc. But those are levels that we eye in the market to help us with our trade setup. Okay, so go back. Okay, so minor support or resistance levels can be identified as key levels in the market and are potentially good reversal areas. Key levels are often respected very frequently on indices. So you'll find that most indices respect well to key levels, so it's very easy to get entries of key levels in the market. Major support and resistance is found on the higher time frames, i.e. weekly charts, daily charts, and the H4. So those are your major support levels. The minor support levels are found on the lower time frame. So you can find them from the H1 time frame, M30, M15, M5, and even the M1 chart. Okay, so before we end this video, just want to go back to the chart. I want to show you guys a quick example on my whiteboard. Okay, so when it comes to support and resistance, guys, the main concept that you guys need to know is the fact that a resistance, we've gone through what it is. So a resistance is obviously on top, right? And the bottom will be your support level. Now, on the resistance, let's just write this here. That's your resistance. This becomes support. Okay, so, and this is basically what price is doing. So, okay, before I get to the price, so the concept I need you guys to understand here is you got to think of a resistance as a ceiling, right? And a support as a floor in the market. So what do I mean by this? Quite simply, I'm going to look at it as this is you standing on the floor, right? So picture yourself standing on your floor and picture yourself holding a tennis ball in your hand. When you throw this tennis ball up to the ceiling, what happens? It's going to hit the ceiling and bounce off, right? And when it bounces off the ceiling, it's going to fall and drop to the floor, right? Likewise, if you were to take that same tennis ball and throw it, and throw it on the floor, it's going to bounce up and hit the ceiling. Now, price reacts in the same manner. If you throw the ball to the ceiling, it's going to bounce down and hit the floor. If we throw the ball to the floor, it's going to bounce on the floor and jump up to the, it's going to bounce to the roof. So in price's journey, it does exactly the same. So you will find that price will respect the resistance, drop to the support, and respect the support, right? And then from there, bounce up, hit the next resistance, come back down, hit the next support, and so forth. Now, until price is ready to break out. So when price breaks out, you are looking for it to break out, obviously, after the third touch on the resistance or the third touch on the support. So when it does so, when it breaks out, right? So let's say price broke out here. This now is called what we call a breakout. So when price breaks out, we are looking for price to show us that yes, okay, it's broken out, but it needs to come back down and respect this area in the market before it can climb further. So it needs to break out of the resistance. The resistance now has to turn into a support in the market. So this area becomes a support. It's no longer a resistance, it becomes a support, right? So price will come back down, retest the support, and then push up. Likewise, if price broke out to the downside here, it needs to come back, retest this area in the market, which now becomes the, so a support, when a support is broken, it now becomes the resistance. Okay, so that's resistance, and then price will continue to the downside. Okay, next example. So this is very important to know about support and resistance. So again, that's our resistance, that's our support. You can see that price is coming from a upward trending market. It hits a resistance, comes down, drops to the support, climbs again to the resistance, drops again to the support, and then does this. Okay. Now, the important thing I need you guys to understand here is these areas in the market. What happens here at the resistance is everybody starts to sell. All retail traders will start to sell. So you sell at these areas in the market, and your stop loss is always above this area. So your stop loss, if you entered here or here, your stop loss is above, right? It's above the resistance. As a retail trader, that's how you trade. You see a resistance, you sell off the resistance, and you've got a stop loss above. However, how we look at this is different, because above the resistance, you need to know that there is now liquidity sitting there. So there's now liquidity sitting above the resistance. And that's why in this scenario, price breaks above the resistance and does what we call a fake out. So this is a fake out or false breakout, which I go through in detail a little bit later in the course. That's your false breakout, right? So price catches liquidity. In other words, it takes out all the stop losses above the resistance and then falls into the direction that it's supposed to fall into. So it will break now the support, come back, retest the support, now turn resistance, and then drop to the downside. So likewise, the same applies in the reverse scenario. So everybody that is buying on the support, if price was going to break out to the upside, it needs to take out let's do it more clear. Okay, so you will see that at this area, everybody starts buying, right? Because why? We're in an uptrend, and price hasn't exactly given anybody a lower low as yet. So retail traders are still looking to ride this wave to the upside, right? So everybody will start buying at everybody buys at the support and sells at the resistance, right? So in this case, that's your support, so everybody starts buying. Now, if price were to break out of this to the upside, it needs to catch the liquidity to the downside first. So everybody that buys, their stop losses are all placed below the support. Hence why at this point, price comes back down, breaks through the support, does a fake out, right? And then falls back inside the support level, right? So this is catching the liquidity that's below. So we call that a liquidity catch, right? So we've caught the liquidity below, and now price will break out of this resistance to the upside. So the liquidity that's below gives price the momentum to continue its run to the upside. Okay, so those are the two, the important aspects that you need to know when it comes to support and resistance. Knowing where retail traders stop losses are placed, and understanding price's intention when it comes to a breakout. If price was to break out of this consolidation area here, then it needs to catch liquidity to one side in order to move in the opposite direction. So for example, in this case, it needed to catch liquidity to the downside at the bottom before it made its move to the upside, because liquidity obviously will drive price, right? If price were to break out to the downside, it needed to catch liquidity to the upside first. Okay, so yeah, that basically sums up support and resistance. Yeah, see you guys in the next video.